Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you are new here, don't forget to hit that subscribe button and turn on notifications so you won't miss any of our powerful Forex trading tips and strategies. Alright, now for all my returning viewers, you're welcome back once again. In this particular video, we are going to be diving into a technique that every scalper should know, and that is none other than the stochastic scalping strategy. Okay, so I'm going to be loading the stochastic oscillator to the chart. Okay, this is a killer method for getting precise entries, especially if you are aiming for quick short-term trades in the forex market. So you might want to grab a pen and paper and get ready to take some notes. Now, first things first, let us talk about the stochastic oscillator. Now, this is a momentum indicator that helps us understand whether a currency pair is overbought or oversold. Okay, it is really popular in the trading world because it gives us great insight into when a price might reverse or at the very least pull back. Basically, it shows the position of the most recent closing price compared to the price range over a specific period of time. The stochastic oscillator moves between 0 and 100 as we can see here, with two key levels to watch, the 20 level and the 80 level. When the indicator is above 80, the market is considered overbought and we could be looking for potential sell opportunities. Alright, when it's below 20, the market is seen as oversold, which could signal a buying opportunity. But as you know, we don't just jump into a trade based solely on overbought or oversold signals. And that's where the stochastic scalping strategy comes in. Now let us go over the setup. We'll be using the default settings, right? The default settings, as we can see, is 5 for the percentage key period, 3 for the slowing, and 3 for the D percentage D period. Okay, so to set up your chart, simply add the stochastic oscillator to your preferred trading platform. This is the MetaTrader 4 platform that I'm using to record this video. Most platforms will let you add it with just a few clicks. All right, so once it's added, you'll see two lines: the percentage K line, which is this light green line, which is usually faster, and the percentage D line, which is this dotted red line, which is the slower moving average of the percentage K. Now, these two lines crossing each other is often a strong signal in itself. Okay, so here's where it gets interesting. Let's talk about how to actually use these signals for scalping. When you are scalping, you are looking for quick entries and exits, and the stochastic oscillator can help with both. One of the best ways to use this indicator is to look for crossovers in the overbought or oversold regions. Okay, for example, when the percentage K line crosses above the percentage D line below the 20 level, it's a sign that momentum may be shifting upwards, okay, which can indicate a good buy entry point. As you can see, this would have been a great spot to enter a buy. Stop loss would have been below the swing low. Take profit could have been at the nearest resistance zone, or we can just wait for the stochastic oscillator to enter the overbought territory and begin to cross downward before we exit our buy. All right, conversely, if the percentage K line crosses below the percentage D line from the overbought territory, which is above the 80 level, we might be looking for a potential sell entry. And remember, this is just the entry signal. All right, always double check with price action or other indicators to confirm what the stochastic oscillator is telling you. This extra confirmation can make all the difference. So if we enter a sell, we can consider setting our stop loss above the swing high. Then the nearest support level can be our take profit, or we can wait for the stochastic to get into the oversold territory and start pointing upwards in order to exit our sell trade. Now let us talk about time frames, because this is crucial for scalping. Since we are looking for quick moves, the 1 minute and the 5-minute charts are often preferred for scalping. Okay, so if you want to scalp, you can use the 1 minute chart or the 5-minute charts to look for trade opportunities. Okay, these shorter time frames allow us to capture more entry opportunities in a shorter period. But keep in mind that the lower the time frame, the more noise there is in price movements. So be prepared for quick decision making and make sure you're comfortable with the speed of these trades. If you're not sure which time frame to start with, I would recommend if you're not sure which time frame to start with, I would recommend testing out both the 1 minute and 5 minute charts to see which one fits your trading style best. Okay, now that we've covered entry points and time frames, let's touch on something absolutely essential, which is risk management. In scalping, trades happen quickly, so it's critical to keep a close eye on your risk per trade. With fast trades, there's a higher chance of getting caught in market whipsaws or sudden spikes. To mitigate these risks, make sure you are using tight stop losses, ideally just a few pips away from your entry point. For example, when you enter a sell here, like I said, you can just set your stop loss above the swing high, okay? So if it's a buy, you can just set your stop loss below the swing low, just some pips away from your entry point, all right? It's also a good idea to aim for a favorable risk to reward ratio, even in scalping. With this strategy, try setting your take profit level slightly above the nearest support, that is for a sell, or above or below, slightly below the resistance, the nearest resistance for that's for a buy, okay, for optimal gains. All right. Okay, now to 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 confirm your signals, you can just decide to use any other indicator of your choice. Perhaps you can use a moving average to confirm signals. For example, in this situation, we had a sell signal from the stochastic oscillator as we had this bearish crossover in the overbought territory. So we would have just waited for price to cut below the moving average. That would have been our sell confirmation, and would have considered entering the sell right around here and set stop loss just above the swing high. And then for the take profit, we can just wait for in this case now we can use three different signals for for exiting our sell. We can decide to use the nearest support level, or we can decide to wait for price, the stochastic to get into the oversold territory and begin to point back upwards. So you can see now, if you are using this signal, you would have exited around here. You would have missed out on these other moves, right? So you see each of these exit signals have their own advantages and disadvantages. If you had used the moving average, you would have exited here, so you would have caught more pips if you had used the moving average, right? Because you can see that do not just exit after one candle crosses above the moving average. Wait for at least two candles to close above the moving average. So in this case, we had two candles close above the moving average. So that's where we would have exited our sell if we are using the moving average as for our exit signal. Okay, but if we are using the nearest support level, this is where we would have exited. Okay, so just use which one works, whichever one that is more preferable for you. All right. Now, to wrap things up, here are a few key takeaways. The stochastic oscillator is a nice indicator for spotting short-term entry points in scalping, especially with those overbought and oversold signals. All right. Make sure to set your time frames appropriately and practice solid risk management. Those two factors will make all the difference in your success with this strategy. And as always, take your time to practice this strategy on a demo account first. Scalping can be tricky, especially with the quick decision making required, so make sure you are comfortable before going live. If you found this video helpful, please hit that like button and drop a comment if you have any questions or if there are other strategies you'd like me to cover. And don't forget to subscribe to the channel for more expert Forex trading tips. Thanks for watching, and I'll see you in the next video.